we do see some reform optimism certainly fueling the gains that we saw in the Nifty 50 yesterday in terms of those new record highs. Is this rally sustainable?
So what happened and where are we going? What happened, at least based on conversations we had at JPMorgan with a lot of our clients, people sold down in advance of the election because of a perceived asymmetry in the outcome. A Modi victory was expected, therefore not very much. If it didn't happen, then significant market downside. It's a self-fulfilling prophecy. If you sell prior, then obviously you get a bounce-back rally, which is what we started to see yesterday. I think the critical question from here is really focusing in on the changing nature of the overall Indian economy. And there's two things to highlight. Number one, just the absolute radical outperformance of the services sector. So a 67% increase in service exports over the course of the last 5 years, dramatically taking control of the overall economic narrative. And another element that we haven't discussed that much, India has always been an economy, from an investment perspective, inextricably linked to an oil conversation because of the impact on currency and balance of payments. That's changing radically. And if you look at the oil efficiency of GDP growth in India, again, you've seen a radical transformation, significantly more efficient economy, which means it's significantly more delinked to the oil price moving forward, which is interesting and I don't think gets enough conversation.
Going back to India, earnings is going to be really the key that you're watching in terms of deciding which sectors that you like and don't like. Can you explain?
The critical element of the India story moving forward is whether or not the promise of foreign direct investment starts to increase manufacturing as an overall percentage of GDP. We mentioned earlier in the program, service exports have increased 67% in the last 5 years. Manufacturing has gone from 10% of GDP to only 8% today. And so that incremental driver growth will be absolutely critical for the sustainability of the India story as we look forward on a 5 to 10 year time horizon. And that will play out through multiple modalities, both in terms of overall economic growth. You will see significant sector rotation within the Indian stock market. It will also matter for rates as well as FX as you start to look at the balance between foreign direct investment and portfolio inflows, which may not be fully sustainable forever. And so it's really the manufacturing component of the Indian economy that we're spending a lot of time trying to think about.